When most people think about investing for retirement, they picture stocks, mutual funds, ETFs, and maybe a few bonds. But what if your retirement account could actually own physical gold? What about silver or platinum or even palladium? The truth is, many self employed investors don't realize that a properly structured solo 401k can invest in physical precious metals. In fact, it's one of the most popular ways people diversify their retirement savings beyond traditional Wall Street investments. But here's where many investors get tripped up. Not all gold is allowed, not every silver coin qualifies. And one of the biggest misconceptions is believing that if it's made of gold, your solo 401k can buy it. That is simply not true. The IRS has very specific rules about what types of precious metals are permitted inside retirement plans, what purity standards they must meet, which coins qualify, and why collectible coins are generally prohibited. Understanding these rules before making a purchase can help you avoid costly mistakes and keep your retirement plan compliant. In today's video, we're going to cover everything you need to know about buying precious metals with a solo 401k. We'll explain the IRS requirements, discuss approved metals and coins, walk through real-world examples, and highlight common pitfalls to avoid. Whether you're interested in protecting your retirement from inflation, diversifying your investments, or simply learning more about the alternative assets, this guide will give you a solid foundation. So let's get started. Every investment behaves differently. Stocks can experience rapid growth, but then decline sharply. Real estate often provides income and long-term appreciation. Private lending can generate consistent interest income. Precious metals, however, serve a different role. Rather than producing rental income or dividends, many investors view precious metals as a way to diversify a retirement portfolio and potentially reduce overall portfolio concentration in traditional financial assets. Gold, in particular, has often been discussed as a potential store of value during periods of inflation, currency fluctuations, or broader market uncertainty. While past performance does not guarantee future results, some investors choose to include precious metals as one component of a diversified long-term strategy. Silver shares some of these characteristics while also having significant industrial demand. Platinum and palladium are widely used in manufacturing and industrial applications, giving them a different supply and demand dynamics than gold. The key point is this: people generally aren't buying precious metals because they expect a monthly income. They are buying them because they want another asset class that may behave differently from stocks or bonds over time. Diversification is one of the main reasons investors considered adding precious metals to a retirement portfolio. So here's an example. Imagine two retirement portfolios. Portfolio A consists entirely of stocks, mutual funds. Portfolio B includes stock, real estate, private lending, and a modest allocation to precious metals. While there's no guarantee either portfolio will outperform the other, some investors prefer diversification across multiple asset classes rather than relying solely on publicly traded securities. A solo 401k can provide that flexibility. One of the biggest advantages of a self-directed solo 401k is the investment flexibility. Unlike many employee-sponsored retirement plans that limit participants to a menu of mutual funds, a properly structured self-directed solo 401k allows investments in a much broader range of assets, provided they comply with IRS rules. This includes physical precious metals. It is important to understand that the IRS does not maintain a simple list of every investment you can make. Instead, the rules focus on prohibited assets, prohibited transactions, and disqualified persons. If an investment is permitted and all applicable rules are followed, a solo 401k may be able to hold that asset. That flexibility has made precious metals an attractive option for many retirement investors seeking additional diversification. So let's talk about the four precious metals generally permitted in a solo 401k provided they meet IRS requirements. These are gold, silver, platinum, and palladium. Not copper, not diamonds, not gemstones, not jewelry, not rare collectibles. Just these four precious metals that meet specific standards. However, there is another important rule. The IRS simply does not allow just gold is allowed. The metal must meet minimum purity requirements. So let's look at each one. Gold. Gold bullion generally must be at least 99.5% pure or 0.9955. There are certain expectations, such as American gold eagles, which are specifically allowed by statute despite having a lower purity than 9.995. Silver bullion generally must be at least 99.9% pure or not 0.999 fine. Platinum bullion generally must be 99.95% pure or 0.99955 fine. Palladium must generally be 99.95% pure. Again, just like platinum. These purity standards are one of the most reasons investors should work with reputable precious metals dealers who understand retirement account requirements. Buying metals without verifying that they meet IRS standards could create unnecessary complications. One of the most common questions we hear is, what coins can my solo 401k actually buy? Many investors assume every gold coin qualifies. That is not the case. Certain bullion coins specifically recognized under federal law are commonly eligible, along with qualifying bullion bars that meet the required purity standards. Examples include American Gold Eagle coins, American Silver Eagle coins, American Platinum Eagle coins, many qualifying Canadian Maple Leaf bullion coins, Australian Kangaroo bullion coins that meet the required fineness, approved bullion bars, and rounds produced by accredited refiners that satisfy the required purity. Remember, what matters isn't simply the design on the coin. It must also meet the applicable IRS standards and be appropriate for retirement account ownership. Again, if you have any questions, make sure you talk to the precious metals dealer that you are working with about approved retirement coins. So here's an example. Suppose David wants to purchase 10 1-ounce American Eagle gold coins inside his solo 401k. His retirement plan purchases the coins through an approved precious metals dealer. The coins become assets of the solo 401k, not David personally. If the value of the coins increases over time, the appreciation belongs to the retirement account, not to David individually, until distributions are taken under applicable retirement rules. This is probably the single most important section of today's video. The IRS generally permits investment grade bullions that meet the applicable standards. However, retirement accounts generally cannot invest in collectibles. So what exactly is the difference? Bullion is valued primarily for its precious metals content. Collectibles are often valued because they are rare, historical, artistic, limited edition, or sought after by collectors. Let's compare a few examples. A standard investment grade gold bullion coin, generally allowed if it meets the applicable requirements. A rare 1907 historical coin worth hundreds of thousands of dollars because of its rarity, generally considered a collectible, not permitted. A graded coin sealed in a collector's case because of its rarity, generally prohibited. A gold necklace, not allowed. Gold jewelry, not allowed. Rare artwork made from gold, not allowed. The IRS wants retirement plans invested in a qualifying investment assets, not personal collections or memorabilia. That's why you'll often hear professionals emphasize buying investment grade bullion rather than collectibles. Now that we've covered which precious metals are generally allowed, let's walk through how the purchasing process actually works. Many people picture themselves walking into a coin shop, buying a few gold coins, and then putting them into their retirement account. That's not how it works. The investment is made by the solo 401k, not by you personally. The retirement plan, not the individual, is the buyer. Here's a simplified step-by-step process. First, your solo 401k is established and funded through eligible contributions or rollovers. Next, the plan has available cash in its bank account. You identify the precious metals you want to purchase from a reputable dealer that offers investment grade bullion meeting IRS standards. The purchase is made using retirement funds, not personal funds, which you can write checks or wire the money over. Once purchased, the precious metals become assets of the solo 401k. Every step of the transaction should be clearly reflect that the retirement plan, not you personally, is making the investment. So you'll use the name of the retirement plan and everything when making that purchase. Keeping clean documentation helps demonstrate that the asset belongs to the retirement plan and not the account holder individually. So here's an example. Sarah has $125,000 available in her solo 401k. She decides she wants to allocate approximately 10% of her retirement portfolio to precious metals. She purchases 4 1-ounce American Gold Eagle coins, 100 ounces of silver bullion, and 2 platinum bullion bars. The purchase is paid entirely with retirement funds. The invoice is issued to the solo 401k. The metals are held as retirement plan assets. Sarah never writes a personal check. She never mixes personal money with retirement assets. Everything remains inside the retirement plan. Another common question is whether investors should purchase bullion coins or bullion bars. The answer depends on the investor's objectives. So let's compare the two. Bullion coins are often highly recognizable. Many investors are familiar with products like the American Gold Eagle or Canadian Maple Leaf. Because they are widely recognized, they may be easier to identify and trade through precious metals dealers. Bullion bars, on the other hand, often provide a larger amount of precious metal in a single product. Depending on market conditions, larger bars may carry lower premiums per ounce compared to smaller coins. However, larger bars may also be less flexible if an investor wishes to liquidate only a portion of their holdings. Imagine owning one 1-ounce gold coin versus one 10-ounce gold bar. If you need to sell approximately 1 ounce worth of gold, it would be much easier to sell a single 1-ounce coin than part of 10-ounce bar. Some investors prefer coins because of that flexibility. Others prefer bars because they may offer lower cost per ounce depending on the product. Neither choice is universally better. It is simply part of developing an investment strategy that fits your retirement goals. One of the biggest questions surrounding precious metals is storage. After all, we're talking about physical assets. Unlike stocks, there's something tangible that needs to be safeguarded. Investors often ask, can I keep gold in my home safe? These questions are generally considerable discussion over the years. Because retirement assets should remain clearly separated from personal assets, many investors choose to use professional storage solutions like a depository designed for their retirement owned precious metals. However, you are allowed with a self-directed solo 401k to keep it in a safe in your house, but you have to make sure that you don't use it for personal gains and you keep it in that safe for the retirement account only, and keep proper documentation and make sure you don't mix anything with that, or the IRS, you will break IRS rules doing that. So professional depositories typically provide high security vaults, insurance, inventory controls, regular audits, secure transportation, and so on. The objective is to maintain clear ownership records while protecting the retirement assets. Regardless of the storage method selected, maintaining separation between retirement property and personal property is an important principle. Good record keeping helps demonstrate that the asset belongs to the retirement plan. Another misconception is that precious metals should make up an entire retirement portfolio. For many investors, precious metals are simply one component of a diverse strategy. Every investor has different goals, risk tolerance, and time horizon. Some investors may choose a relatively small allocation to precious metals while maintaining larger positions in traditional investments. Others may choose a different mix depending on their objectives. The important point is that the precious metals do not have to replace every investment. Instead, they can complement other asset classes. Remember, gold doesn't generate rental income. Silver doesn't pay dividends. Unlike private lending, precious metals don't produce interest payments. Their role is different. Many investors view them as one piece of a broader long-term retirement strategy. So here's an example. Jennifer has $500,000 in her solo 401k. She decides to diversify across several investments. Her retirement portfolio includes $250,000 in publicly traded securities, $125,000 in real estate, $75,000 in private lending, and $50,000 in physical precious metals. Rather than relying entirely on one investment type, she spreads her retirement assets across multiple categories. Whether that's appropriate depends on her individual goals and financial circumstances, but it illustrates how precious metals can fit into a broader investment strategy. Let's go over some of the most common mistakes investors make when purchasing precious metals through a solo 401k. Mistake number one, assuming every gold coin qualifies. As we've discussed, some gold products are permitted, while many collectibles are generally not permitted. Always verify eligibility before making purchasing. Mistake number two, buying jewelry. Gold jewelry is not approved retirement investment. Neither are gold watches, gold necklace, wedding rings, designer jewelry. These are personal assets, not retirement investments. Mistake number three, buying rare collectible coins. Many collectible coins derive much of their value from rarity rather than precious metals content. Retirement accounts generally are not intended to invest in collectibles. Mistake number four, mixing personal funds and retirement funds. Every purchase should be made by the retirement plan. Don't reimburse yourself later. Don't pay with a personal credit card expecting the plan to pay you back. Maintain clear separation. Mistake number five, poor record keeping. Every purchase should have documentation, invoices, receipts, account statements, storage documentation, purchase confirmations. Maintaining organized records can make future reporting much easier. Mistake number six, making emotional purchases. Sometimes investors become excited about limited edition coins because they are advertised as rare. Remember that retirement investing should generally focus on long-term strategy rather than impulse buying. Example, Tom attends a coin show. A dealer offers him a beautiful rare gold coin minted over 100 years ago. The coin costs 3 times the value of its gold because of its rarity. Although it's fascinating, it may not be appropriate for a solo 401k. Instead, Tom chooses investment grade bullion that meets IRS requirements and aligns with his retirement strategy. Before you purchase any precious metals, your solo 401k, there's one topic that's just as important as knowing what you can buy, and that's understanding what you can't do. These are called prohibited transactions. A prohibited transaction occurs when you use your retirement account in a way that benefits you personally instead of preserving it exclusively for retirement purposes. The IRS expects retirement assets to remain separate from your personal finances. That is why it's so important to think of your solo 401k as its own financial entity. When people hear self-directed, they sometimes assume they can do whatever they want with the investments. That's not the case. Self-directed means you choose the investments, not that the IRS rules disappear. Let's look at a few examples. Example one is personal use. So suppose your solo 401k purchases 10 American Gold Eagle coins. You decide to keep those coins in a display case in your living room because you enjoy looking at them. That could raise concerns because retirement assets should not be used for your personal enjoyment or benefit. Example two, selling your own gold. Imagine you already own several gold bars personally. Instead of purchasing new bullion through your solo 401k, you decide to sell your own gold into the retirement plan. That would generally be considered self-dealing. The retirement plan should not be buying assets directly from you. Buying for your child. Your daughter wants to begin collecting gold. You think, I'll just let my solo 401k purchase the coins and give them to her later. This is how retirement plans work. Every investment inside the plan must exist solely for the benefit of the retirement account, not family members. Example 4, mixing assets. Suppose you purchase 5 retirement-owned silver bars. Later replace them inside the same safe with your personal silver collection without maintaining clear records. Now it's difficult to distinguish which assets belong to you personally and which ones belong to the retirement plan. That's exactly the type of confusion good documentation helps prevent. Whenever you're unsure whether a transaction is appropriate, it's wise to ask questions before moving forward. It's much easier to structure an investment correctly from the beginning than it is to fix problems after the fact. Now let's discuss why many investors decide to include precious metals in their retirement portfolio in the first place. Advantage 1 is diversification. One of the biggest reasons investors purchase precious metals is to diversify beyond traditional stocks and bonds. A portfolio invested entirely in one asset class may react differently than one spread across several types of investments. Diversification doesn't eliminate risk, but many investors use it to avoid concentrating all their retirement savings in a single area. Advantage 2, physical ownership. Unlike stocks or mutual funds, precious metals are tangible assets. Many investors appreciate owning something physical that has been recognized as valuable for centuries. Advantage number 3, investment flexibility. A self-directed solo 401k gives eligible investors access to alternative assets that many traditional employer retirement plans simply do not offer. Rather than being limited to a menu of mutual funds, investors may have the ability to include real estate, private lending, private businesses, and qualifying precious metals. Advantage 4, long-term perspective. Retirement investing is generally measured in decades, not weeks. Many investors who purchase precious metals aren't trying to make a quick profit. Instead, they're thinking about preserving purchasing power and maintaining a diversified retirement portfolio over years. Advantage 5, portfolio balance. Every investment behaves differently. Stocks may rise rapidly, real estate may generate rental income, private lending may provide interest payments. Precious metals can add another asset class with its own unique characteristics. While precious metals can offer diversification, they also come with important considerations. First, prices can fluctuate. Like any investment, gold, silver, platinum, and palladium can increase or decrease in value over time. Second, precious metals generally do not generate income. Unlike rental properties, they do not collect rent. Unlike dividend-paying stocks, they do not distribute dividends. Unlike private loans, they do not earn interest. Your potential return depends primarily on changes in the market value over time. Third, physical metals may involve storage or insurance costs depending on how they're held. Finally, precious metals should be viewed within the context of your overall retirement strategy. No single investment is right for every investor, which is why diversification and thoughtful planning are so important. So let's answer some of the questions we hear the most. Question 1, can my solo 401k buy gold? Yes, provided that gold meets applicable IRS requirements and is purchased in accordance with the retirement plan rules. Question 2, can I buy rare collectible coins? Generally, no. Most collectibles are not permitted investments for retirement plans. Question 3, can my solo 401k buy silver? Yes. Qualifying silver bullion that meets the required purity standards is generally permitted. Question 4, can I buy platinum and palladium? Yes, provided that they satisfy the applicable purity standards and the retirement plan requirements. Question 5, can I wear retirement-owned gold jewelry? No. Jewelry is considered personal property, is not an appropriate retirement investment. Question 6, can I purchase metals from myself? Generally, no. The retirement plan should not buy assets directly from you or engage in self-dealing transactions. Question 7, can I mix retirement metals with personal collection? Keeping retirement assets clearly separated from personal assets is one of the best ways to maintain accurate records and avoid confusion. Question 8, can I sell my precious metals later? Yes. If your solo 401k sells the precious metals, the proceeds generally return to the retirement plan where they can be reinvested in other permitted investments subject to applicable tax and retirement plan rules. Let's finish with one final example. Imagine Jennifer owns a consulting business. Over the years, she built a solo 401k worth $800,000. Rather than investing everything in one area, she creates a diversified retirement portfolio. She allocates $350,000 to publicly traded investment, $250,000 to rental real estate, $100,000 to private lending, $75,000 to qualified precious metals, and $250,000 remains in cash for future opportunities. Her precious metals include investment grade gold and silver bullion that meets IRS requirements. She maintains clear records of each purchase, keeps retirement assets separate from her personal finances, and periodically reviews her overall allocation to ensure it still aligns with her long-term retirement goals. This example illustrates how precious metals can complement other investments rather than replace them. For many investors, they're simply one piece of a broader retirement strategy. Precious metals have been valued for thousands of years, and today they remain a popular diversification choice for many retirement investors. But owning gold or silver inside a solo 401k isn't simply about purchasing the first coin you see. Understanding IRS requirements, purchasing qualifying bullion, avoiding collectibles, maintaining proper documentation, and following prohibited transaction rules are all essential to protecting the tax advantage of your retirement plan. The flexibility of self-directed solo 401k opens the door to invest that many people never realize are possible, including real estate, private lending, private businesses, and qualifying precious metals. The key is making informed decisions and keeping your retirement investments focused on long-term growth and compliance. If you're considering adding precious metals to your retirement strategy and want to learn more about how self-directed solo 401k works, visit www.survival401k.com. We provide educational resources to help investors better understand their options and make informed retirement planning decisions. If you found this video helpful, be sure to like the video, subscribe to the channel, and leave a comment below letting us know. If your solo 401k owned one precious metal today, would you choose gold, silver, platinum, or palladium, and why? Anyways, thanks for watching, and we'll see you in the next Survival 401k video.